Now, the Korean economy expanded by 3.9% in the first quarter from a year earlier, beating the market forecast of 3.7%. The Bank of Korea expects growth of 4% this year, up from 3% last year.
The BOK's optimism was underlined by the 1.5% on-year rise in the Consumer Price Index for April, the biggest since a matching increase seen in August last year. However, the nation's consumer sentiment has been hit hard by the ferry tragedy in this country, raising concerns that the growth target may not be met this year.
For analysis, we are joined live in the studio by Dr. In-chul, Professor of International Economics at Sung Kyun Kwan University. Professor Kim, thank you for joining us.
Well, glad to be here.
Now, the Korean economy grew 3.9% in the first quarter of this year from a year earlier. Now, if it were to achieve this 4% growth target, would it be safe to say that the Korean economy is back on the normal recovery, normal growth track?
Well, unfortunately, I should say it's not safe to say that, because the figure 3.9% growth, seems very impressive. But you have to remember that that is, annualized the quarterly growth rate for the first quarter of 2014. Now, the quarter-to-quarter growth rate is only 0.9%. Now, if, say, the economy grows 0.9% every quarter, the annual growth would be a little over 3.6%. But the problem is with the second quarter. The second quarter growth was, the prospect for the second quarter growth is very weak because of the ferry disaster. So I would say that the economy is not being put on the normal track yet.
Even if the economy grew at this 4% mark, a lot of experts are saying that the average Korean, the local consumer, is not really feeling the effects of this economic recovery.
Yes, because these years, we can analyze the growth performance by focusing on the private consumption and the business corporate firms' investment and the government spending. Now, of these three components, corporate firm is taking a very predominant role in the macroeconomy, because they're the ones who leading the economy forward, while enjoying the lion's share of economic fruit. And the consumers are very weak in the sense that their purchasing power is being very weak, and these days they stop spending by canceling their travel plans and all different programs and events because of the ferry tragedy. So consumers are not really taking a big role in macro economy.
Right, but prior to the Seoul ferry tragedy, of course, the Bank of Korea had said that consumer spending was picking up and that Korean consumers were actually opening up their wallets. So is that the case?
Yeah, we were hoping that could happen, but the thing is that these years household debt is so high, so their debt burden is unbearably getting high. So unless the government tries to cut the burden of the household debt, we cannot expect too much, from the consumer spending in increase.
So why does an event like the Seoul ferry have such a huge impact on the domestic economy, and how does that reverberate in the medium to long term?
Yeah, because we will have a lot of negative economic impact on the economy, especially the second quarter. And Korean people are so sentimental, and they're very sympathetic with the families who lost their children, and they're not really spending much. So the second quarter growth performance is going to be very poor, and I hope actually this tragedy is not going to have an impact on the economy in the third quarter. Having said that, the tragedy will have a very significant long-term impact on the people, because this tragedy will remain as one of the worst traumas inflicting the people for a long time to come.
Definitely. So let me ask you this. What are some measures that could or should be taken by the government to boost consumer spending, thus boost economic growth?
Okay, there could be a few measures to stimulate the economy or to boost the economy. The government can reduce the the burden of their debt, and the low interest rate, and do something to relieve the cost or the burden of the debt. And secondly, the government can improve the investment environment in Korea. And at the same time, the Bank of Korea, which is in charge of monetary policy, can provide or inject more currency into the economy, and perhaps they can reduce a little bit the interest rate.
All right. Well, Dr. Kim, thank you so much for sharing your insights with us tonight.
My pleasure.